TheoTrade. This is Don Kaufman. March 2nd, 2022. We are minutes after the cash close here on this Wednesday afternoon. Oil just ripping higher, yet the market's ripping higher with it. Obviously, that's going to be one of the primary topics of conversation here. And before we go any further, listen, you might look at the S&Ps at this point in time. They're up just shy of like a 2% move to the upside. You may see a rally. I see nothing more than the upper edge of just a wicked volatility channel that has been in place since kind of mid to late January. With that, again, you've got oil up some 7%, 111 a barrel. It has got inflation written all over it. At the exact same time, some testimony from none other than the Fed chairperson himself, Jerome Powell today, stating that for the most part, a 25 basis point bump higher is about all we're going to get per se in the March timeframe. All right, let's get to work on this evening's video discussing what I termed this volatility channel. Okay, before I even go into it, I'm going to tell you right now, you should prepare for considerably more volatility, which I'll explain along the way. But let's first detail this volatility channel that we've been talking about kind of week in and week out. And to get very, very specific here, the volatility channel that I'm referencing, as I said, it kicked off kind of mid to late January with the accumulation of some really, really heavy open interest. Now, whenever I'm referencing, open interest, that's a reference, of course, to the options marketplace. So some really heavy open interest kind of accumulated back here, in that late January timeframe. We continued and have been in this particular range. And again, it's a volatility channel, volatility box. I tend to call it a little bit of like the hurt locker. In effect, all that you're seeing, inside of this volatility channel is just pretty continued back and forth motion, a brief breach ultimately below it. This was in very large part some geopolitical risk, some market risk. We're right back up there. But what's so unusual today is to see, again, the marketplace being rather resilient, as I said, in the face of $111 oil. But that is in large part to the fact that the bonds got absolutely walloped. Nevertheless, let's really define where this volatility channel and the upside of it, upside of the volatility channel is somewhere right around 44.11. Okay, we're just about 30 points shy, of that. To the downside, I mean, right around 4,200, stick a fork in us, we're done. We're going to go to the downside. So when I look, at this burst to the upside, specifically today's trading session, I don't really see anything. I don't see anything that we didn't see, in the previous few trading sessions. Nothing that we didn't see, from the gap and the gap down ultimately from Friday to Sunday. Again, it's much of the same. Now, to confirm that we're likely just in this volatility channel. Now, let's not dispute the fact that we could probably head a little bit higher. As I just said, that 44.11, maybe a few points north of it, that's pretty much all it would, would be kind of written off at that point. So what are some of the areas that can confirm this? Well, clearly, the talk of the town, of course, has got to be oil. I'm not going to sit here, I'm not going to sit here and explain that, 7% move up in oil is going to be healthy for the markets. Listen, the oil market is an absolutely, wicked backwardation. You can look at the chart all day long, We are exploding and squeezing higher right now in oil. It's inflationary, How can that possibly be good for the markets? Well, it's probably not by any stretch of the imagination good for the marketplace. I'm sure somebody will find some commentary on there. So how can the marketplace rally in the face of oil, flying high? The answer lies in bonds, Take a look at the bonds. They just cratered today. Now, on this particular front, I've actually got more questions than answers as to why such a wicked and significant move back down. Listen, yes, okay, Jerome Powell spoke. There was, commentary consistent with what everybody kind of anticipated, and that is some of the geopolitical uncertainty might actually slow them down. They didn't necessarily say that, but we're looking at, again, a 25 basis point hike, specifically in March. With that, though, I mean, the markets, okay, the interest rates went, higher. Take a look at the TNX, okay? Any way that you want to kind of slice this and dice this, any way you want to put it, okay? The break lower in bonds, which I find very unexpected, took financials, which got crushed yesterday. The financials were back, baby. And right there, that, people, is your rally back, right? So what you have right now is financials. They loved it. Up what? 2.6%. With it, when ultimately the energy sector, 2.3%. That was enough right there to sustain the S&Ps. So why, in my voice, do I have the hint of bearishness? Well, because tech underperformed. This is the monsters of tech. Tech right now looks like it's just hanging out, waiting for the next round, if you will, of sell side to come in. And I'm going to tell you right now, if these bonds continue to see sell side activity, all of a sudden tech is going to go into what? Fear mode again. Oh no, rates are really going to rise. And if they do, tech then goes into a downward spiral. Now, that's not enough to go on. Let me show you some other areas of concern. Okay, the dollar still poised to have an absolute, phenomenal breakout. I mean, it already has ultimately broken out, but the dollar to explode above the 98 level, okay? You look at today and you're like, this rally, it didn't mean squat in terms of what the dollar sees. Number two, did volatility come down? Well, yeah, and a lot of people would look at volatility, by means of the VIX. But even if you do look at the VIX, and I just do not buy into technicals in the VIX is still very much, in a considerable, if you would, uptrend. But as I said, that's not per se what I personally look at. And I get it. It's still in the uptrend over here, but I look at the volatility futures. The volatility futures, are they still in backwardation? 13-day is 29.80. That's the March. The apes are 29.20. That's in backwardation. A little further out in time, look at the ape versus May, 29.16, May, 28.45. Serious backwardation. Then you look May to June, more backwardation. Everywhere you look on the screen, you still see risk. I mean, yeah, the bonds backed off, but again, the irony of that is the bonds backing off. As I said, that could probably strike some fear into the heart. You need another 3-point sell-off in the bonds, and you are in serious, turmoil then back with the monsters of tech. That's when, you're going to see the next round of sell-side activity in big tech. And you might think to yourself, this is going to help the financials. Remember that I said this, on the weekend video. The object of our affection, of bearishness for this week was unequivocally the financials. The financials, are holding on right now to the lower edge of their expected move. What has the Nasdaq done this week? The Nasdaq, for the most part, massively unchanged in the week. And last, but definitely not least, we want to look at the SPX. And I want to leave you, with a little bit of uneasiness, if you will. And I'll tell you what, in this marketplace, you should have some uneasiness. The expected move, for the entire week is about $126. That is equivalent to the expected move, and that's plus or minus. $126 to the upside, $126 to the downside. We got a little wild, maybe a little frisky on Tuesday. Today we rallied back up, but right now, please recognize we are massively unchanged on the week. You have substantial movement that is still priced into this marketplace. And I do not want to discount at all the ability to see a little bit of a bid come in, maybe even tomorrow morning. Watch out right now to the downside. None of the major, risk parameters that I specifically look at have really come off enough, okay, to get off your game, to get off your guard. We're still in the volatility channel. Volatility futures are still in backwardation. Oil is trading in never, never land, okay? Tech was a laggard today, not a leader in this particular rally. We saw the rip your face off rally, though, specifically in financials, which has been really one of the weakest aspects of the month of February. Okay. Everything at this point still, okay, looks like significant risks right in front of us. With that, thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.